What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why Tesla's looking pretty strong right now and why we are very likely to get a bullish continuation, and why I'm still very excited for where the stock is likely going. I'm going to break down what the charts are telling us, what's going on for this week in the markets, as we have some very important earnings coming out, not to mention some huge economic data. I'm going to show you what the data is also telling us about Tesla and something very important that the man, the myth, the legend himself, Elon Musk, ended up tweeting about that's very good for Tesla. Now, before I break anything down about Tesla, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. It has been extended for another 2 weeks, so check it out before they run out. With that out of the way, let's get on with the video. Tesla's up 7.43% for the day. Let's go. It's looking pretty decent right now. And it does look like it wants to continue pushing up. We actually closed above 130, which is pretty insane. Now, in my previous video, I mentioned to you guys, okay, Tesla was sandwiched between these two very important levels. This would be this like 125-ish zone and then this 115-ish zone. And we could have broken in either direction, but I was thinking that Tesla would try to hold this level and maybe close very close to this 125, maybe try to hold it. But I mentioned to you guys, approaching earnings, we could see this thing continue to respect the rising wedge going into the 25th. And I did expect it to maybe get a breakout later. I didn't expect it to happen this quickly, but we ended up actually seeing the breakout. We saw Tesla break above this level. And I told you guys, if we broke 125, this thing is going to fly to 128 to 130 pretty fast, maybe even higher. And that is what ended up happening. Now, sometimes the stock is even faster than what you expect. Sometimes it does unpredictable things. But the bottom line is, we're still looking pretty good. Now, the real question is, what does this mean for earnings? Because if we're pumping really hard in this rising wedge pattern going into earnings, does this mean that Tesla is going to just explode? Or might Tesla end up getting an opposite reaction? That is still very possible. And this actually incentivizes people like Elon Musk and Tesla's entire team to try to announce something that could actually help keep the share price up, such as some kind of buyback or something. Well, I will probably talk more about that in a later video, but I just want to note that from a technical standpoint, right now, Tesla's looking pretty decent. Now, I want to note something else that's kind of funny, and that's the fact that Jim Cramer is saying that he believes the stock market's going to rally for a couple of months. And honestly, guys, I mean, this makes me less optimistic in a way. I don't. I already showed you guys many indicators suggesting that the market is not going to likely continue to push up forever. We're going to get a bearish reversal soon, and this makes me a little bit more confident. We know Jim Cramer tends to be wrong, and the inverse Cramer strategy tends to work pretty well. So that's just something else worth noting. It's just a joke, but anyways, going into Tesla, we have 185 million in volume above average. That's very awesome to see. And we pumped on higher volume, so very, very awesome, up over 7% for the day. Now, this short volume percentage, which has been relatively high, the shorting going on, the shorts having control over the price, this trend is likely going to start coming down pretty hard. Meaning, if you consider the fact that, let me just show you guys something else that's important. The short interest right here. This thing has been on a bit of a decline. It went up again just last week by Friday. It likely is going to start coming down a bit because of the fact that so many shorts piled into Tesla. And if this thing makes these explosive moves, more shorts may start to close their positions. And when they do this, what they tend to do is they close their puts and they hedge by buying more shares. That's the way they hedge. It's very similar to the way that the market makers dealt to hedge. But I'm saying this because this could actually lead to more buying pressure for Tesla to actually help push this stock up. I also want to note the fact that historically we're actually green about 48% of the time on Wednesdays. This could change again depending on the big data, which I will talk about in a couple of minutes. And other than that, I do expect the price pairs ratio to finally start pushing up. It's been a very long time since that happened, and this is often what happens when we see Tesla gain more momentum when it starts pushing up, because now more interest is on the stock, more people are going to start watching it. And I want to note that Tesla is still fairly undervalued compared to how much SPY has pumped. And I do think that the market has a little bit more room to continue pumping. It is still very possible, and this could actually give Tesla an extra boost. Now, looking at the data for tomorrow, I want to note you have to remember we have, I believe, PPI coming out. This is going to be very important. This is heavily associated with CPI. Month over month, we want to see a decline of 0.1%. We also want to see core PPI year over year at about 6.8%. That's the consensus. We need to reach these expectations. We need to, because if we miss big time on these, or even just by a little bit, this would not be the best for the markets. If we beat these, and I think we most likely will, because of how CPI was at expectations, we should at least meet the expectations, or at least beat on them for PPI. If we do, this could actually help the market continue to rally. Now, when it comes to earnings, we had some earnings that came out, and we had very mixed earnings for the first time in a long time. Goldman Sachs actually had one of their worst earnings in decades. They missed very hard on their earnings per share, not very good. But Morgan Stanley did end up beating by a bit on both revenue and also their earnings per share. So this is starting to show us that, okay, this earnings cycle is not going to be as strong as people initially thought. We might actually start to see lots of flat earnings, maybe lots of down earnings. And that's very ironic, considering the fact that the market is still very greedy. The fear and greed index is still very greedy. People are still not anticipating, or maybe even ready for what could end up coming. Charles Schwab has earnings for tomorrow, not to mention PNC. We have some big banks coming out. This will be very important for us as well. This is going to be in the morning, I believe, and then we have more coming out a little bit later. For Thursday, do not forget we have Netflix, the first big dog that's going to be reporting its earnings. This will be super important for the market. It's going to give us some good hope and some good ideas of what is likely to come. Now, I think so many eyes are going to be on Netflix. This could actually move the whole market. But then the week after, we have Amazon by the 2nd of February, and then Tesla the week after on the 25th. And that's part of the reason why Tesla is starting to pump up. We know people become very excited. And if you are trading options, watch out for that implied volatility crush. That could trick a lot of people. Not the best of things for many new investors. Elon Musk had something very interesting on his Twitter page. I wanted to actually talk about this because people in a part of Switzerland were just talking about how they just criticized Tesla. They didn't really like the whole electricity powering a car being fully electric. They mentioned there were so many problems that, I mean, they were very subjective, but in my honest opinion, I didn't really agree with their points. They were talking about how they didn't really see this as a very sustainable measure. They said it's no different from a gas car and things like that. And it was pretty funny to hear them say that. And then Elon Musk came out and he responded with, "That is ironic indeed. Doubtly so. Given that Tesla given that Tesla Model Y is the best selling car in Switzerland." So that was very funny. The fact that Musk is still on Twitter doing what he does best, and that's roasting others, coming up with very good comebacks. And I have to agree with him. And the main point and the main reason why I'm bringing this up is because we're seeing lots of exposure and lots of growth. For the calendar year 2022, the best selling car in Switzerland was the Tesla Model Y, and we're seeing massive growth, especially in Europe. We're seeing many European countries transition away, and they're transitioning different mechanisms for powering things. We're seeing a big increase in demand for electricity, and we are going to see new exposures as the years go on, especially after what happened between Russia and Ukraine. It's been very difficult for people all over Europe. The energy crisis is still going on. And this is why Europe is investing so much on different ways to actually power their cities, their cars, and etc. They also are very, very keen on Tesla's mission, and the EV sector is just growing like crazy. Europe is technically the second largest EV market uh, compared to like China and the USA. So I do expect this to continue to grow, and I do believe it's still very awesome for Tesla. No matter what people try to say about Tesla's being horrible in the snow, uh, people having their own opinions, which I'm okay with. People could have their own opinions, but it doesn't change the fact that this is a great company that has so much growth. And that is what Elon Musk is trying to let everyone know. They are the highest selling car in Switzerland. Anyways, let's get into the charts. What are the charts telling us? The first thing I want to note is the fact that when you put Tesla side by side with SPY, all right, to my left, I have Tesla, and to the right, you're going to see SPY. Today was a very awesome day because for so long, okay, Tesla has been trading sideways. It's been stuck, just sandwiched between these two major support and resistance levels right over here, just stuck. And SPY was the one that was pushing up. The market was pushing up, and Tesla was weak. That's why the price price ratio was just way down here. Tesla was weak, weak, weak. And finally, after so long, after we got some consolidation, Tesla got a breakout to the upside. And we finally got to see what appears to be an inverse head and shoulders that's now playing out, and Tesla looks like it might continue to pump all the way up to this 135 136 level very, very soon. Now I'm saying this because today, okay, SPY got a bit of a pump in the very beginning of the day, hitting 400, but once we hit the descending broadening resistance, it was very ironic because we got a bit of a rejection on SPY started coming down, it started bleeding. SPY closed a little bit red today, and Tesla was the one that closed green, up 7%. So now Tesla's gaining some relative strength. It's been a while, but I can't be too keen on this unless this happens for a longer duration of time because it's only been one day, but so far it's so good for Tesla. Now, I also want to note that both the QQQ and the NASDAQ were also green. So now the NASDAQ is the one that has more room for upside than SPY, or at least it seems that way so far. And this is what I predicted in one of my earlier videos because I drew out on the NASDAQ, I drew out this pattern. Excuse me, sorry guys. Um, we had this head and shoulders like pattern, which I believe is forming on NASDAQ, which implies there is going to likely be more downside in the future as we get into like February and March. I do believe that's going to happen to the markets. But before the downside comes, I drew out some upside first for the next week or two. I do believe there's going to be some upside. I do believe the market should hold up, and it's going to complete the right shoulder that's left for this head and shoulders. Now, I want to note that this was the zone I was like talking about. We're very close to it, very, very close. I predicted that the NASDAQ would fill this gap. Right here, there's this gap. We're very close to filling it. We almost filled it. We didn't quite get there, which makes me believe there's more upside. And maybe PPI and maybe the jobless claims numbers for Thursday, the important economic data could help. Maybe we get some decent earnings. Maybe the market pumps up a little bit more. SPY got very close to my target. I did tell you guys we're going to see some strong resistance right here, where this resistance line is. We actually rejected off of it. But if we get a good PPI report, if we start to see some higher levels of jobless claims, if we get some decent earnings, this thing could push up a little bit more. Now, I don't believe SPY is going to break 410. If we break that, then yes, we could turn very bullish, but I don't think that's going to happen. I've showed you guys many reasons for that by looking at many divergences, but I believe this thing could hit about 402 to 406, somewhere there it's going to peak. Then we're going to slowly see this thing slow down and start to bleed as time goes on. And I do believe a big reversal is yet to come. I'm not just saying that because of Jim Cramer, by the way, that was just a joke, but there is maybe some sprinkles of truth within that claim. I'm saying this because of the charts and some of the data that's coming out. On Thursday, we have the debt ceiling limits being met. I know some people think it's going to be some kind of um, ironic event that doesn't really cause anything. I could disagree with that though, because I believe that there was a time in history, like in 2011, when we saw a debt ceiling crisis because it was so hard for Congress to come to a consensus. It took many, many months. And on top of that, it was during a very, very hard financial situation. So this could cause some stress in the credit markets. If that's the case, the media is going to go nuts. This could actually be very negative for the market, or at least trigger a domino effect where then we have the Fed, we have more negative earnings. All these things combined could drag the market down. Don't forget the market moves in cycles. We also have the potential for energy to start coming up that could affect the markets too. I want to talk about a couple other things before I end and I start talking about my price prediction for Tesla and other things like that. But there are other things I have to mention. Looking at the RSI and the MACD on SPY, we are still seeing a potential divergence, particularly on the RSI. It is still existent. And I want to note the fact that the divergence that essentially formed is telling me that we might see the market form another top that's lower than this high before a big reversal comes to the downside. But before that happens, because of earnings, I believe Tesla might be the one that kind of outperforms the market, at least temporarily. But everything could change after earnings, so we have to wait for what announcements are going to be made. On the NASDAQ, like I mentioned earlier, I am anticipating a head and shoulders like pattern that's going to form. That's what I believe is likely to happen. I do believe we have some upside left, and I think it's going to be led by Apple. Apple did something. Sorry, excuse me, guys. Apple did something that I predicted. I predicted Apple would get a break above this key resistance. I was telling you guys it was 136.8. That's where the supply zone was, and we broke above it. We actually had 137. We did come down as the market kind of slowed down, but we did close green today. I believe that Apple has potential now that we could actually break out of this supply zone. We have potential to fly all the way up to about the very, very low 140s. It could happen on Apple. If that happens, it could actually help SPY drag up a little bit, maybe over the next few days, and also NASDAQ and the QQQ. I mentioned to you that the QQQ has gap resistance coming up very soon. We came very close to it, super, super close. And I do think that Tesla and Apple could help drag this up. We have a nice gap up here. Could we get to the gap? I don't know for sure. We should be able to get to gap resistance, and we might be able to fill the gap. I think it still is very possible. So I believe the NASDAQ is going to outperform SPY for the next like week or two, week and a half maybe. And then things could really change. The dollar index right now, it's still very undervalued. It's very close to my 101 to 100 target, but I do believe, like I said before, a big bounce is still yet to come. Do we have a inverse head and shoulders? Looks like we almost have it, so it might start pushing up very soon. But I'm not talking about a small push up. I'm talking about a much bigger push up. I believe that's going to happen over the next couple of months, and that's going to be very bearish for the stock market. 10-year treasury yield is doing exactly what I predicted. Very close to that 34 level. I expected a bit of a bounce. It's starting to bounce, starting to push up. This is not the best of things for stocks. I think it's going to kind of hang out down here for a little bit of time because the NASDAQ has some room to go. Maybe SPY does too. But soon, I expect this to start filling these gaps up here, going to 36, 37, going back to fill this gap up to 38. I think that's going to happen over the next couple of weeks. When this happens, it might be triggered by stress in the credit markets. Why? Maybe it has to do with earnings. Maybe it has to do with what's going on with the debt ceiling. Maybe it has to do with the Fed. But I'm saying this because when this thing starts pumping, it's going to be correlated with the dollar maybe also pumping. And when that happens, the VIX might also pump, leading to the stock market coming down, leading to some downward pressure for Tesla. The VIX is in a very interesting state. We do have this gap on the 1 hour. Could we come down one last time if the market pumps a bit? Sure. But I do believe the bottom of this is very close to 18. I mean, if it does come lower, I wouldn't expect this thing to crash too hard because we do have the divergence that formed right over here. A little bit hard to see, but you could see it right here. You could see we formed a lower low on the VIX, but the RSI is showing the opposite. This tells me whether we fill this gap or if we base at 18 or if we come a little lower, it's completely possible But this VIX is going to get a big move to the upside once we get into February, in my opinion. By the second week of February, in 1 month from now, I expect this thing to be in the mid to high 20s or even higher than that. I expect the market to come down because of that. And I think the real catalyst to bring down this market, it may be in front of us or it may be yet to come. But I just want to note there's still some red flags out there. I do believe the market's going to make a lower high compared to the previous highs, and we should start to see the market reverse very soon. Now, for Tesla, what do I see happening? Well, right now, if I pull up our MACD, I want to actually hide my drawings just for a second. On the 1 hour, we do have a nice crossover. We have some nice momentum. And then on the daily, the same thing actually happened very recently. It was actually pretty flat here. But what's good about it is since that 101 drop, we've been on a bit of an uptrend. We actually got a breakout. So now the MACD is opening. The RSI is starting to pick up. And the RSI is not like in an oversold state for the daily, which tells me this thing definitely has more room for upside. I believe over the next couple of days, this thing is going to be retesting that 136 level. And we could even see this thing hit about 140. I think it's very possible. Now, excuse me, looking at the trend, all right, how on earth are we going to be pumping? If you notice, we might not even respect this like rising wedge perfectly. We might just be even more bullish. Sometimes Tesla does that because it's more like I could actually like delete this and show you guys the bigger trend. And that's the fact that we had this inverse head and shoulders like formation that's slightly slanted. I think it might actually help this thing continue to push to the upside. We also have this gap up here. There's a small gap around this 137 area. I think that's going to be a level to watch on Tesla. We also have a bit of a chop zone around right here. We actually had some chop between this 142 to 136 level. We could see Tesla slowly try to push up from there. So for tomorrow, I don't want to focus too much on that like rising wedge because Tesla was actually above it for a large part of today. So instead, I want to just look at this level to level. We do have this gap up here, okay? Hypothetically, right now, the support that's holding Tesla up, the very strong support was that 125. That's where this gap starts. We broke out of 125 and we rallied past 128, past 130, and we actually held 131 into close. So that's very strong. We broke two major levels of resistance in one day. If this thing keeps going, what I'm going to be watching for is 135. Between 135 and 136, we have some resistance, and I can see Tesla approaching that over the next couple of days. We could have a bit of a cool off day tomorrow, just temporarily, before this thing blasts all the way off to 135 to 136. Then we have the gap fill around that 137. I mean, if we get to 137, we're going to fly to maybe 140 pretty quickly. Now, it may not all happen in one day. It may take a couple of days to get there, but those are just some like targets I'm essentially seeing. For tomorrow, where Tesla moves is also going to depend on the market, how PPI comes out. And I'm anticipating it's going to be a little bit better than expected. And I also think Tesla's going to outperform the market. I believe for tomorrow, Tesla's going to get a strong open like this. It might try to stop around 135 to 136. And always remember, it also depends on the news. I'm assuming that we don't get any bad or like super crazy good piece of news. This is just based off technicals alone. I can't predict the news perfectly. But just based off this, I wouldn't be surprised if we get a strong open. We slow down as the day goes on, just like this. We see this thing trade kind of flat for a little bit of time. Then we slowly get another strong power hour and we see Tesla close very close to this 135 area. I think that could happen just for tomorrow. And I also believe that if the whole market pumps, Tesla could pump even higher. We could even just try to go for the gap fill and come down, but this would be the level I'm watching for. Now, always remember, if Tesla breaks below 130, the next critical level to be watching for is around this 128-ish zone. Specifically, Tesla actually bounced off 127.4, very close to that. So I'd be watching this level right here. And then if we ended up breaking below that. There's 125, which I think is going to be a pretty decent support zone now that we actually broke it so well. Then there's the gap fill down here. So these are the support zones to watch for just in case. But once again, I don't expect us to come down too hard. I think we're more likely to try to continue pushing. We actually saw Tesla break the high of the day at the very end of the day. So it was still showing strength, was pumping, and it looks like it wants to continue. I predict we might get a nice pump up into open, hitting 135 ish. Then we come down, slow down throughout the day, and maybe if the market pumps, hopefully we see Tesla close very close to 135. I'm really hoping for that. I think it's very possible. I would love to see it. But once again, it also depends on the data. This is just my prediction, which is not financial advice. With that said, I want to thank you all so much for listening. Please have an absolutely incredible rest of the day. Tesla to the moon because the long term future is still incredibly bright. And peace out.